Shares of IBM have been stuck in a rut for years. The one-time tech titan has seen its stock drop by over 35% in the last decade. But our next guest says Big Blue could be due for a big breakout. CAIM LLC President Catherine Avery is taking the mound for a fast pitch on IBM. She's on the fast line right now. Catherine, why do you think now? Why do you think now is the time the stock's going to break out?
Hi, Melissa. Thanks for having me. Well, this is a transformation story. And as you said, this company has not grown for years. Years of disappointment in the earnings. But we are now in a transformation from low growth into high growth. They just spun off Kyndryl, which is their low growth business. Now it's a focus on Red Hat, cloud, software. And I think with the new CEO in place, I think we're going to start to see many more changes. In this last quarter, where we finally saw the spin-off with Kyndryl, we saw an acceleration in EPS and top-line growth, and we expect that to continue. EPS are expected to grow 20% this year, another 10% in 2023. The stock is only trading at a 13 multiple. It's a 30% discount to the S&P 500. And on top of that, number three, which is where we really like the stock, 5.3% dividend yield. 25 years of dividend increases, 9% free cash flow yield. That's double the dividend yield on the stock. This is the type of stock that we at CAIM want to own in a rising rate inflationary environment. Low PE, high quality, above average dividend yield.
Karen, you got a question for Catherine?
Yeah, so over the last decade or so, they've spent a ton of money on buybacks, and which turned out to not have been a good use of cash. What's their strategy now with buybacks?
Well, I think we're going to continue to see the buybacks. We saw a lot of the company has a very, very strong cash flow. A lot of that cash flow has gone to pay the dividends. The company has also used it to strategically get into higher growth businesses. And I think we will continue to see the buybacks continue as well. The dividend yield, Arvind said in his last call, was continuing to be sacred for him. And we can expect to see those dividend increases continue. But I think it'll be a combination of both the dividend increases and the stock buyback.
Hey, Catherine, Tim, thanks for coming tonight. Talk to me about the software growth. A high margin business for them, and one that I think we're relying on to see this revalue.
Mm-hmm. Yeah, 20% growth we saw in the last quarter. We will probably continue to see that accelerating at that 20% growth rate. 8 to 9% revenue growth for the company is what the company has guided for us. I think that's going to continue. We are coming into a cap spending cycle. I think now that we're past the pandemic, we've had a lot of supply chain dislocations going on. Companies are going to start to look to reevaluating their internal infrastructure and how to enhance their productivity. Companies have been seeing issues with trying to build new facilities, build new engines, et cetera. Software is one of those places where you don't have to really deal with the supply chain dislocations and still at the same time be able to enhance your productivity. So I think we're coming into a new cap spending cycle for technology.
Catherine, thanks for sharing your fast pitch with us tonight. We'll see you soon. Catherine Avery. No more questions here. We're going to vote. So are you buying Catherine Avery's pitch on IBM? Guy, what do you say?
Mel, can you read my smart board for me, please?
Okay, it says, Gary Cohn, hashtag GDC.
Yes, as you know, Mel, historically, there have been three certainties in life: death, taxes, and my jump shot. I'm going to add a fourth. Never bet against Gary Cohn, who's now a year into his vice chair role at IBM. If anybody can figure it out, it's the aforementioned GDC.
Interesting. Tim, what do you say?
Yeah, look, I'm a buy. That's a kind of a weird big call. I think this is a nice, solid line drive up the middle. It's not a home run, doesn't need to be. And I think if you think about IBM, I think they finally found a way to give you kind of mid-single digits revenues. But more importantly, it's a company that's giving you about 10 or 15% free cash flow yields. I think it's, in this environment, it's defensive.
What's your vote, Karen?
Yeah, so I'm with the boys there. This was a not so clever incorporation of the IBM logo to say I buy.
Ooh,
I like
it,
cheap valuation is always interesting to me, and hopefully she's right about software and better margins, and so interesting risk reward.
Steve Grasso?
It's a sweep.
Boom.
Wow.
It's a sweep. And I think if they could really turn into a growth company where everyone looked at this as a secular bearish story from 200 down to the recent levels, it's starting to build a little bit of a base. If they could change the narrative, I think it's a buy.
You know what that means. All the
And poor
viewers are
girl,
going to
poor
say
girl,
no.
she's dead on Twitter.
Yeah.